Hello, everybody. Welcome to Tuesday. The S&P 500 was up a little bit over 0.5% today, but we had kind of a wild ride with some very interesting pieces that are important to understand. So first of all, we took off. We were up almost at 1.5%. We got the seasonal motion today. It's election day. Midterms are good for the stock market, generally speaking. Don't know what's going to happen for a while here, but nonetheless, market's moving up. It's earnings season still, so that's usually a good thing for the market. All of a sudden we saw the market drop 2% really from its high to low, went into a negative before it started to recover. And if you look behind the scenes, what happened was that there are a couple of cryptocurrencies exchanges, Binance and FTX. And Binance was selling some assets that FTX has, created a liquidity issue for FTX, and they needed some money. So Binance actually offered to buy FTX with a letter of intent. And in that interim there, the cryptocurrency started to come down a lot. We saw Bitcoin drop about 17%. And so the reason I bring this up for two reasons. Number one, we've always kind of been talking about, is there a relationship between cryptocurrency and the stock market? If cryptocurrency fell apart, what would happen to the stock market, if anything? Well, today we saw that there was a definite direction that the stock market was moving, and that was the same direction as cryptocurrency. Has a lot to do with leverage. If these big institutions and or people are borrowing money to buy their cryptocurrencies and they drop a lot, they get a margin call, they got to sell something to meet that margin call. If they're selling stocks and bonds that you happen to own or indexes or what have you, that could be bringing down the market. And that's certainly what we saw today. So, a 2% drop is not a really big deal, but it did resolve itself with this letter of intent. So you wonder, if there was some other issues and a contagion that happened in that cryptocurrency arena, would that be a contagion into our stock market? We saw similar things that happened in 2008. There were these things called credit default swaps. They were insurance policies on top of mortgage bonds. And when mortgages started to default, those insurance policy had to pay off, and companies started to go under, like Lehman Brothers. And that created a big cascade of roughly a 30% stock market drop that happened after that. So we've been talking a lot about watching for things that might break. And, we talk about China, we talk about what's happening in Ukraine and these different areas, but usually the things that break are the things that, we're not really talking about. And so maybe we need to be focusing a little bit on cryptocurrency to see what might happen there. So I think it's very fascinating. Maybe it's a big nothing as far as that goes, but it did show some relationship between cryptocurrency and the stock market today. So, well, that could be good or bad, depending on which directions things go. But we're putting a lot of different asset classes and different things under pressure when you raise rates this much. And what happens if, the different cryptocurrencies come down dramatically? Does that create a big margin call across the board? Anyway, so those are things to watch for. So a very interesting time to be watching. And of course, we don't know the election results, probably won't for a little while. See how that plays out with the market, and then see what happens with the inflation report on Thursday. If it's higher than expected, that could bring the market down. If it's lower than expected, that could continue to push us forward to the upside. So great time to be watching. Look forward to talking to you tomorrow. Thank you.